Welcome to the Kapital News. I am your host, Alex Karitis. Today is Wednesday, April 22nd, 2020. Thank you so much for joining me. The title of today's podcast, State Bailouts Next and Market Manipulation. No, say it ain't so, Joe. Market manipulation. There are already calls for investigations within the CME, the Chicago Mercantile Exchange, in regards to this week's crazy movement with the prices of WTI West Texas Intermediate, oil falling into negative territory for WTI for the first time in history, settling at a near negative $38 per barrel. I'm going to read one of those letters calling out for an investigation in regards to perhaps some malfeasance, some manipulation within the oil markets. So I'll get to that. Market performance we're going to discuss. Tomorrow is Thursday, so there will be obviously the initial claims numbers for unemployment. Expectations at this point are 4.5 million. So an additional 4.5 million Americans are expected to have filed for unemployment insurance. Of course, the economists could have it wrong. The market may very well have it wrong, as they have in the previous few weeks. And of course, over the past 4 weeks, we are now over 22 million Americans, close to it, out of work. That completely wipes out all of the job gains that took place from June of 2009. So over a decade's worth of growth and expansion, even though it was the longest expansion in U.S. recorded history, although it was also the weakest expansion, all of those job gains over the past decade plus have been wiped out in a matter of 4 weeks, which we discussed last week on our podcast. But just understand the magnitude and the seriousness of what is taking place, not just in this country, but around the world. This is far from over. Far from over. This is just the tip of the iceberg. Yesterday's podcast, A Barrel of Problems, outlined a lot of these things. Had to throw in a report now and a concern from the United Nations in regards to world hunger. 821 million people on this planet, as it stands today, go to bed hungry. Around the world, 821 million. That's more than 10% of the globe's population. Let that sink in for a minute. And we tried to offer some perspective on that yesterday when we took into consideration the amount of money printing that is taking place to the tune of tens of trillions of dollars by central banks the world over, and trillions of dollars worth of spending from federal governments the world over. And we still have 821 million people starving to death. And the United Nations is basically forecasting throughout the remainder of this year, and I anticipate it'll go into next year as well, if not beyond, multiple famines. People are going to starve to death. They already are. It is going to get worse. These are the protests that we have been talking about, the global protests that were taking place well before the onset of COVID-19. Things are even worse now. What do you think these people are going to do? Before, they may have had jobs. They were just complaining about the increase in the cost of living because taxes were going up, a bus fare was going up, a metro ticket was going up, etc., etc. Now they're out of work. Now you have supply chain shortages, disruptions, cancellations because you have some supply chains that are going to move. A lot of these countries that were protesting were third world, emerging markets. They make their bread and butter off of commodity prices. Well, you see it. Commodity prices are tanking, at least for the time being. So much so that we've entered negative territory with the price of oil earlier this week. Obviously a very short-lived affair. Hopefully it doesn't happen again, but it could. These countries and these people are truly suffering. If it was bad before, it's even worse now. So what do you think they're going to do after this? Now, people were starving. Now they're really starving. If a father, if a mother can't feed their children, what do you think they're going to do? Okay? Like I said, when all else fails, they take us to war. And it doesn't necessarily mean that it's going to turn out being a war amongst nations. It could be civil wars all over the place. It could be an attempt or the success at government overthrows the world over. People are fed up of this system. That's why he's making the statement, asking the question. Yeah, I understand everybody's eager to get back to work. A lot of people in this country are very proud. They don't want the handouts from the government. They want to go earn their paycheck. I applaud that. That's how it's supposed to be. But in the backdrop, ask yourself the question. You're going to do that to perpetuate what type of system? Are you demanding change, or are you just simply saying, let me go back to work? Let me go back to the way things were? Well, newsflash. The way things were completely unsustainable. Don't you get it? The $1,200 that you're getting, on top of whatever else the government is going to throw at us, the sit down, shut up money. Most people in this country, it just makes you a middleman. It just makes you a pass-through. Because you're going to get that $1,200 and you're going to pay off a credit card. You're going to go pay off an auto loan. You're going to pay off your mortgage. You're going to give it to your landlord, who in turn has to pay off his mortgage on the property. The banks are getting it. A financial wing of an auto company is getting it, etc., etc. Payday lenders are getting it. You're a middleman through another bailout. That's all it is. How many people are pocketing the money because, well, they don't have any debt? Not too many in this country. A significant portion of the country doesn't have $400 in the event of an emergency. Well, this is an emergency. They don't have it. And the social and behavioral changes that will ensue following any type of quote-unquote opening up of the economy, whenever that takes place, is going to be drastic. It's going to be drastic. People are not just going to jump back into the deep end of the pool without hesitation. Well, you do it. Let's see what happens to you. Man, let me dip a toe in, maybe a foot. Maybe we'll go down to the shallow end first, make our way in. That's how people are. Okay, they have no sports to watch. They have nothing else on TV except the news, right? And it's all fear-mongering. That's all it is. COVID-19 this, COVID-19 that. Stay in your house. Don't touch anybody. Cover your mouth. Wear a mask. It's all fear-mongering. It's programming. And there are serious issues with it. We've been on top of this since the get-go. People calling it a hoax, saying it's nothing. This is something. You're shutting down world economy here. This is something. You can have a medical argument about it, but I'm not a doctor, so we're not going to do that. But we're going to see how this all plays out, and it is not playing out very well, especially from an economic standpoint. So that was yesterday with the barrel of problems, all of those issues, a little bit of perspective. Markets were down yesterday. Today they rebounded, probably off of the back of the news of oil going up. And why did oil go up? Well, because Donald Trump had a tweet out today. Thunder Thumbs was back at it, and threatening to shoot down Iranian gunships if they harass our vessels, our U.S. Navy, over in the Persian Gulf and the surrounding region. I understand this. I don't want the Iranians messing with our U.S. Navy or anybody else for that matter. But what effect did that have on the price of oil? Well, it shot up. It shot up. You think the president doesn't know this? I'm not necessarily saying this is all manipulation from the president, but come on, we know the cards he plays. We know he has done this before with relation to oil, with relations to the whole trade deal with China last year. Oh, there's going to be a deal. Everything's fantastic. Everything's great. Blah, 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 and then nothing happened. Jerked you around for months. Months. And there was nothing to write home about, nothing fantastic. And then, of course, what takes place is COVID-19. The Chinese knew about it at the time of the signing of the Phase 1 trade deal. Presumably, I would have to think some intelligence agency within the United States also knew about it, which we're starting to find out was the case. But nothing was done, wasn't really looked into, was sort of blown off. And then, of course, now we're dealing with all of those ramifications. So it is not great. And we have been warning here for quite a while. Again, when all else fails, they take us to war. The increased rhetoric, the tensions that are starting to show, the cracks in the surface, not only from the United States, but other countries around the world starting to blame China for this. And if the news story comes out that, oh, yeah, you know what, yeah, the Chinese They built this in a lab in Wuhan, and it got out. It got out. The question is going to be, what's the narrative, right? At the end of the day, how is the media, how is the government going to portray this? What are they going to spin to the American people? That it was concocted in China, that this was just an act of God, or that it was concocted in a Wuhan lab, got out by accident. Or it was concocted in a Wuhan lab and it got out on purpose. So this is an act of war. This is bioterror. How is it going to be spun? Remember? Weapons of mass destruction with Iraq? CIA telling George Bush it's a slam dunk, Mr. President? They weren't there. So don't think for 1 second that your government will hesitate to lie to you, because they will. They will. There is a military-industrial complex that exists in this country. We were warned about it 60 years ago from President Dwight Eisenhower in his farewell address. We have been living through it since then. And quite honestly before, but now they're really starting to get all of their models down together. It's a science, it's a business now. You understand? When all else fails, they take us to war. A lot of saber rattling, continuing with Iran, continuing with Venezuela, the tensions with China. It's not necessarily going to be a hot kinetic war with China, but it could be proxies through the likes of Venezuela, through the likes of Iran, through economic warfare, through cyber warfare, and a whole host of other things that can be done from both sides. It will not be pretty for anybody. So pay attention to all of this, okay? Stocks right now, the Dow Jones Industrial Average, S&P, and the NASDAQ, the futures are all trading down about 0.5% across the board. Right now, the Japanese markets are up 124 points, representing an increase of about 2/3 of 1%. Let's see, across the pond today, Europe was up 1 to 2%. Right now, the Australian market is down about 0.5 of 1%. On the commodity front, oil was able to rebound. WTI is at $14.33 a barrel. We are now in the front month of the June contract. We will watch this closely. Brent was trading lower yesterday during yesterday's podcast, touching, I believe, slightly below $16 a barrel, but it was able to rebound on the back of that news as well. Brent is now trading at $20.95 per barrel. Natural gas also caught a slight bid, now trading at $1.92 per million British thermal units. Gold and silver did nicely today. Gold is trading at $17.09 an ounce. $1,709 an ounce. Silver is at $15.17 an ounce. And that Uncle Sam's 10-year Treasury note is now yielding 0.61%. Couple headlines across the board as far as what is coming out in Asia and Australia. When it comes to Japan, Japanese services PMI hits new record low. It hits a fresh low of 22.8 for the month of April, down from 33.8. This is Japanese services PMI. Japanese manufacturing shrinks the most in 11 years. Manufacturing PMI declined to 37.8 in April, down from a final 41.1 in March. And remember, anything below 50 denotes contraction. Anything above 50 denotes expansion. So this is no surprise. Japanese manufacturing shrinks the most in 11 years. That takes us back to 2009. We all know what took place then. Australian manufacturing PMI shrinks further. PMI reading of 45.6 in April, down from 49.7 in the month of March. So that's some of the PMI data that has come across. We'll get more of those throughout the evening and tomorrow and the remainder of the week. So we'll keep you posted on those numbers as they become available. So that was some of the excitement in the markets as far as the president threatening to shoot down any type of Iranian gunship, boat ship, whatever the hell you want to call them, if they meddle or harass the U.S. Navy. Look, anytime you are in these types of situations, all it takes is a trigger finger, all it takes is a mistake, and you're at war. Okay? And then you're going to have the misinformation, disinformation media campaign, the propaganda machine that is Washington, D.C., coming out to perpetuate and to justify some sort of conflict, some sort of war. Let's pray that this is not the case, that this does not happen, that this is just Donald Trump maybe flexing his muscles, maybe, trying to get the oil price back up. Let's just hope that at least that's what it is. Because in the worst case scenario, it's war. It's all out war. We do not want it. We don't need it. We can't afford it. Even if we could, we shouldn't want it. Not that anybody gives a damn about costs anymore. Just get the printing press on. That's all it is. Which is why when we start talking about the state bailouts, it's somewhat laughable that Senate Majority Leader Mitch McConnell of Kentucky is now concerned. He's now drawing the line, but we'll get to that. So again, tomorrow we'll see the initial unemployment claims or initial filings for unemployment insurance. Again, the markets are anticipating a reading of 4.5 million. Unless there is another delay, we are also expecting the Federal Reserve to update their balance sheet. Last week it was about $6.3, $6.4 trillion, increasing about $2 trillion over the past 4 weeks alone, with virtually no end in sight. So hopefully they have that number updated, and we'll provide that tomorrow as well. Now, in regards to the oil market manipulation investigation, or at least the call for one, this is from Continental Resources. Okay, so Continental Resources, an energy firm, is requesting an immediate investigation by the Chicago Mercantile Exchange, the CME, of possible market manipulation in the WTI prompt month of May oil futures contracts on the CME. The WTI prompt month May contract price closed at $18.27 per barrel on April 17th of 2020. On April 20th of 2020, the WTI prompt month for May crude oil contracts closed down $55.90 or 306% at a minus $37.63 per barrel. Notably, the CME chose to announce on April 8th, 2020, that it had been testing plans to support the possibility of negative options such that if any month WTI oil futures settle at a price between $8 and $11 a barrel, that it could switch to a different pricing model that would allow for negative pricing. There's a little bit more information, and then they close with a couple more paragraphs. At approximately 10:50 a.m. Central Time today, April 20th, 2020, the CME reiterated that WTI futures can trade negative, which sent the May contract plummeting to approximately $4 a barrel. Trading volume was low prior to today's CME announcement, but became more active after the announcement. Prior to the CME's announcement regarding negative settlements, the contract was trading positive. The WTI futures price for the May contract remained positive until approximately 1:08 p.m. Central Time, when it began dropping precipitously, almost $40 in the last 22 minutes of trading. The price dropped approximately $25 a barrel in a 3-minute time span between 1:24 p.m. and 1:27 p.m. Central Time. This is the first negative WTI crude oil price in the history, and most, if not all, of the price decline occurred in the last 22 minutes of trading. This fact, combined with 1, the CME's unusual announcement only hours earlier, 2, the change in computer models to the Buckler computer model, if I'm pronouncing that correctly, 3, the $40 drop in the last 22 minutes with a $25 drop in a 3-minute span just before trading closed to settle is unprecedented, historical, and materially impacts the monthly average CMA pricing and strongly raises the suspicion of market manipulation or a flawed new computer model. The sanctity and trust in the oil futures markets are at issue, and an immediate investigation is requested and required. Additionally, the CMA price should be adjusted accordingly. So that's from Continental Resources, asking the CME, the Chicago Mercantile Exchange, to look into the possibility of market manipulation and or a flawed new computer model. Makes sense to me, folks. The other thing that I am gravely concerned about with all of this stimulus money, with all this, bailout money, with all of the printing of money taking place is the fact that it is covering up so much fraud and abuse in the system. Okay? You have to understand, so many companies, so many institutions operate as Ponzi schemes or some variation thereof. Remember Bernie Madoff? He'd still be in operation. Believe me when I'm telling you. He would still be in operation had it not been for the great financial crisis. Because Bernie was making all of those, right, quote unquote, making all of those fantastic returns. Well, why would you take your money out if this guy's making awesome returns, right? Don't need to do it. But when there's a recession, what happens? Oh, well, Bernie, we need some cash. We need some cash. We don't want to sell some of our real estate. We don't want to sell some of our other assets, so we just want some cash as a cushion. So sell what we got and give it to us. Well, he didn't have it, right? That's a Ponzi scheme. The game can keep going when you have a printing press to bail out other Ponzi schemes. You get what I'm saying here? So we have no idea how much fraud and abuse lies in wait. But that's what we are predicting here at the Capital News. A wave of defaults, a wave of bankruptcies, a wave of restructurings. Because we don't know the half of it. Okay? That's why I asked the question. Yeah, you want to get back to work, but what system are you going to support? What system are you going to perpetuate? It's a serious question to ponder. Now on to an article out of Bloomberg today. McConnell says he favors allowing states to declare bankruptcy. We'll get to it. We'll get to it. Senate Majority Leader Mitch McConnell said Wednesday he favors allowing states struggling with high public employee pension costs amid the burdens of the pandemic response to declare bankruptcy, rather than giving them a federal bailout. I would certainly be in favor of allowing states to use the bankruptcy route, he said Wednesday in response to a question on the syndicated Hugh Hewitt radio show. Quote, it saves some cities and there's no good reason for it not to be available. We'll challenge that in a moment. The host cited California, Illinois, and Connecticut as states that had given too much to public employee unions, and McConnell said he was reluctant to take on more debt for any rescue. Quote, you raised yourself the important issue of what states have done. Many of them have done to themselves with their pension programs. There's not going to be any desire on the Republican side to bail out state pensions by borrowing money from future generations. These people are brain dead. Does he not realize what he has said, what he has done over the course of his quote-unquote career as a career politician? Does he not understand what he has done? Now this is the line in the sand. This is why this is all laughable. Do you understand why you have to abandon these parties? Because they've abandoned you a long, long time ago. I am not for any of these bailouts, but he has no problem bailing out corporations. But the states, go pound salt. I wonder why that might be, Mitch. Is it because the states don't lobby you? Is it because the states don't give you a lot of money, but maybe Exxon does, maybe Chevron does, maybe Apple and Google do? Could that be something to do with it? You get lobbyists, you get bailout money, or you get political campaign funds from them, but not the states, so screw the states? Again, I don't like the bailouts for anybody, but this is the ridiculousness of everything. And he's supposedly the leader. Give me a break. His statement set up a conflict with House Speaker Nancy Pelosi, who said on Bloomberg television Wednesday, quote, a major package, end quote, of aid for state and local government will be in the next stimulus legislation considered by Congress. McConnell may also find himself in conflict with President Donald Trump. The president said Tuesday, after meeting with New York Governor Andrew Cuomo, that states will need assistance. Quote, and I think most Republicans agree too, and Democrats, end quote, Trump said. Quote, and that's part of phase 4. So there we have it. We are going to be entering the fourth circle of hell, or phase 4 of whatever bailout program the federal government is going to come up with. Again, for those of you who think that Donald Trump is a fiscal conservative, look again. Okay? I said yesterday, there is no end in sight to this. The president seems to be all for it, and here he is again. The states will need assistance. And I think most Republicans agree too. And Democrats. Of course the Democrats do. Why not? It's not their money. McConnell, a Kentucky Republican, noted he blocked additional state and local aid in the last relief package, which passed the Senate Tuesday and is set for a vote Thursday in the House. Oh, what a moral character. What a moral hero he is. We've just been waiting for him to ride in on a white horse all this time. Quote, I said yesterday we're going to push the pause button here because I think this whole business of additional assistance for state and local governments needs to be thoroughly evaluated. It needs to be thoroughly evaluated. What about the $2 trillion, Mitch, from the Federal Reserve? Does that need to be thoroughly evaluated? Does it? What about the other $2 trillion from the federal government already out there? Does that need to be thoroughly evaluated? The bailouts for the airline industries? The energy companies that are coming up? Hospitality? Everybody else? Or just the states, Mitch, because they're the ones that don't give you any money? The idea of allowing states to file for bankruptcy was raised in the wake of the last recession. It drew widespread disdain from Wall Street investors, of course it did, public employee unions, and both Republican and Democratic governors who said it would unsettle the bond market and cause even the most fiscally sound states, which there are very few, to face higher interest rates because of the risk the debt could be wiped out in court. It also criticized by U.S. lawmakers of both parties during a House hearing that was convened to discuss it in 2011 and was swiftly dropped. Okay, here comes some numbers. The National Governors Association has said states and municipalities will need at least $500 billion in aid to deal with the crisis caused by the coronavirus pandemic as tax revenue falls and demands for resources escalate. Oh, this was all caused by the coronavirus. I don't think so, ladies and gentlemen. That's the whole point of my letter, Representation and Recourse, was to draw out and point out all of the things that were destroying the fabric of this country, socioeconomically and otherwise, for years prior to the onset of COVID-19. And lo and behold, just like we outlined in that letter and discussed on this podcast, politicians all over the place are going to use this as a convenient excuse to get as much money as they possibly can. And the National Governors Association is saying the states and municipalities will need at least $500 billion. And it's funny that they're going to the federal government asking for this money because the federal government doesn't have it either. We're projected to hit a $3.8 trillion deficit. With the additional $500 billion that is going to be approved in all likelihood this week, that puts you over 4. Call it 4.5. What's a couple $100 billion amongst friends? Tack on another $500 billion for the states. Now you're at 4.5, $5 trillion. Just keep going. Just keep going. And we're not even completely done yet because we don't know what's going to happen with infrastructure. We don't know what the details of a Phase 4 plan are going to be. Continuing, McConnell said there should be some fulsome discussion among all Republican senators on whether and how to spend more aid to state and local governments and what that money should be spent on. That will be one of the focuses for the next round of stimulus spending that Congress will be taking up, and McConnell's reluctance signals that negotiation could be the most difficult one so far. President Donald Trump said Tuesday that he expected aid to state and local governments would be part of that. So will Mitch bow to the president, or is he going to stick his head in the sand? We'll see. No state has defaulted on its debts since the Great Depression. And even after the last recession, only a handful of cities went bankrupt since governments have broad ability to raise taxes. So there you have it, folks. Get ready for taxes to go up because states don't have a printing press. Okay? So get ready for it. The current economic contraction may leave states facing an even worse fiscal crisis than they did a decade ago. No doubt about that. Which has prompted growing calls from the nation's states and cities for Congress to provide aid to them, aid to help them make up for the taxes lost by the nationwide shutdown. Governors have requested $500 billion and cities and counties $250 billion. So now if you add into it the cities and counties, it's another $250 billion on top of all of that. Just keeps coming. The bond market, however, doesn't appear to be pricing in much risk of defaults. While prices tumbled during a panic sell-off last month, they've since rebounded with returns roughly flat for the year. That's because everybody thinks the Federal Reserve is going to come up and buy everything. Why? Because they are. Because they are until they can't or they won't. Or people finally wake up and says, this is out of control. This is never going to work. This is not an economy. This is not a financial market. That day of reckoning is coming. That's why I say be diversified and be vigilant. That's why I talk about gold and silver, precious metals. Why I talk about it, folks. I don't give investment advice. I give you information. Go do with it what you will. This is out of control. Now, one of the interesting things with all of this, right? Mitch McConnell wants to play the tough guy. Go pound salt if you're a state, city, municipality, what have you, right? Trillions for corporations. I'm against it. No money for the states. I'm against the bailouts of the states too, but, why is he drawing the line in the sand there? Well, we already mentioned why we think that is. But what could be a potential hurdle to all of this? Now, I'm no lawyer, all right? This is one of the people I follow on Twitter. I'm sure many of you have seen her. She's on all of the financial networks relatively frequently. Danielle DiMartino Booth, a former employee within the Federal Reserve, wrote the book Fed Up. Okay, so she gives a lot of good insights as to the thinking and rationale that takes place within the Federal Reserve. She has her own financial economic consulting firm, if you will, that's out there. But I follow her on Twitter. And here she responds to this via a tweet, right? There seems to be some confusion about the Constitution and state bankruptcy. Hope this helps clarify. I've been writing about the legality of state bankruptcy for more than a decade and have studied the ins and outs. An attempt without changing Constitution would land in the Supreme Court. All right? She continues. The second reason stems from the U.S. Constitution. The Contracts Clause of the U.S. Constitution prohibits state governments from, quote, impairing the obligation of contracts. I'll repeat. The Contracts Clause of the United States Constitution prohibits state governments from, quote, impairing the obligation of contracts, end quote, as originally understood and enforced. This clause prohibited state legislatures from passing any laws to relieve either private debt or the state government's own debt. Beginning in 1934, however, the Supreme Court began to interpret the Contracts Clause more flexibly and not as an absolute bar to state debt relief laws. Even under the flexible modern approach, however, the Supreme Court in 1977 reiterated that a state cannot refuse to meet its legitimate financial obligations simply because it would prefer to spend the money on something else. Thus, were Congress to amend the Federal Bankruptcy Code to authorize states to repudiate debt, the Supreme Court would then need to decide the novel constitutional question of whether such debt repudiation would nonetheless violate the Contracts Clause of Article 1, Section 10. So there you have it, folks. Why would the majority leader in the Senate ever think anything of the Constitution, right? Trillions to Wall Street, trillions to corporate America. A career where he has just stood, print more money, spend more money, deficit this, deficit that, a national debt that's at $24.5 trillion already and counting, a deficit that's over $2 trillion and counting and will hit that 3.8 and will exceed it in all likelihood because there is no end in sight, none whatsoever. The president's on board. The Democrats are on board. It's just now Mitch McConnell playing tough. Maybe it's because it's an election year, too. Or again, maybe it's because the states don't line his pockets. Could be all of them. Just pay attention. This is what's going on. The Constitution has been trampled on. It's been shredded. All right? The Constitution doesn't grant the authority to Congress to bail out corporations either, but we've done it. We even have a charter for the Federal Reserve. They're already blowing past that, too, with these stupid special purpose vehicles at the Treasury. I mean, this is ridiculous. Everything has been burnt down, shredded, thrown into the waste heap. That's all it is. Nobody cares. Nobody's calling them out. Nobody's saying anything. This is the leader of the Senate. Not even taking into consideration the Constitution. Why should he? He probably never did during the entirety of his career. So why should this time be any different? And now you could say, well, it's justified. Emergency measures, One thing after the next. I hope you people are starting to put this all together. You understand why I'm saying to leave the Democrat Party, to leave the Republican Party, and to become affiliated with something else? Libertarian, constitutional, independent, unaffiliated Mickey Mouse Club. I don't care. Leave them. Please, please. Do yourself and your country a favor. Because these people are desperate for the attention. They're desperate for the votes. They will pay attention to this eventually. These are small steps, but it can be done. You don't know what to say? You have my letter, representation and recourse that you can find. You can print it off. You can copy and paste it. Use it as your own. Amend it. Do what you want. Keep my name on it. Whatever you want to do. Send it to your congressman. Send it to your senators. Start waking them up. Start saying enough is enough. Because what is coming down the pike is going to be so far worse than what we've already seen. This is the tip of the iceberg, believe me when I tell you. It's not just in this country, it's around the world, and you could say it the other way too. It's not just around the world, it's coming, and it's already here in the United States of America as well. State bailouts next, and market manipulation. You tell me. In short order, we're going to find out. Thank you so much for joining me today, ladies and gentlemen. It's been a pleasure having you as always. Please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed.